Welcome. I think, are we live now?
Well, I can hear you guys.
Hi, everybody. Welcome to our London panel, FinTech and Fashion. We're sharing knowledge from London to everybody in Asia. I believe we're now live with an audience in Hong Kong. So hello, everybody from London. I am your host for today's panel. We have 5 exceptional leaders with us today that will be sharing their knowledge on London. As many of you know, I've spent 20 years in Hong Kong. I arrived in 1997, just before the handover. When I arrived, I remember someone telling me, come and look at the MTR. It's everything that London tried to do, and we learned from London how to do it right. So I know learning from London can improve the ecosystem out there, and equally the ecosystem out there is helping us in London. There's always been strong links between London and Hong Kong, and I am living proof. I built 13 companies in Hong Kong. My most recent one, Fluid, I sold to PwC in China. And so I am living and breathing the Hong Kong dream. And today, the 5 panelists I have with me will share with you what's happening in London and hopefully give you insights to help your businesses perhaps not only expand to London, but understand the ecosystem here and the future of it. So I would like to introduce my guests, and I think the best way is to let my guests introduce themselves so that I get it right. So Sojin Lee, would you mind please starting off by introducing yourself to the audience?
Sure. Thanks for having us. It's a pleasure. And nice to meet everybody on the panel. So my name is Sojin, and I've been in the fashion luxury business for far too long. But started off my career in New York with brands like Chanel and Bottega Veneta, and then eventually moved to London in early 2000 to help launch net-a-porter.com. So I was one of the founding members there, and as you can imagine, really cut my teeth into what the evolution of e-commerce would be. I've stayed in this space for, I don't know, like 15 years now. And basically have just moved on in the entrepreneurial space, launching various different types of startups, but always with a view of retail, always with a view of innovation. And I've now launched my latest startup, which was about 2.5 years ago. And it's a company called Toshi. And Toshi really looks at the opportunity of home service. So in today's age where convenience is really at the core of all connectivity with your consumers, I wanted to be able to define the last mile to last meter opportunity, but specifically for the fashion industry. So we did that by ultimately deciding that we were bridging the gap between online and offline by literally delivering the products, but also the store services to the customer's location on demand. So we're a B2B company. You find us inside Monobrands websites, and you can select us almost like a delivery option, but fundamentally we bring you the product to your location on demand, but also with services that mirror the dressing room services, things like wait and try, size up, size down, etc. That's me.
Thank you, Sojin. Just to mention, anyone listening, if you have questions for our panelists, you can drop them into the Q&A section and I will ask them towards the end of the talk today. So Tom, would you mind please introducing yourself?
Sure. So my name's Tom March. I'm the founder of a venture capital firm called Redrice. I'm a seed stage investor in the UK in premium consumer brands and related technology companies. And I think what I've done 15 years as an investor, but what makes Redrice quite different in the UK is that the majority of the founding team are mainly top tier operators and entrepreneurs from the consumer space. So there was a recent stat by an organization in the UK called Diversity UK, where they looked at 100 venture capital firms across the UK, and they found that only 8% of the partners in these venture capital firms have ever worked in a startup, let alone founded one. And we just think that's bonkers. So the final point on us, our latest fund is partnered with an organization called Warpole. Warpole are the official sector body for UK luxury. So they've got 250 members who are the likes of Net-a-Porter, Farfetch and Burberry. And we're partnered with them, and they share their network and expertise with our fund and our portfolio companies in the premium consumer space.
Thanks, Tom. And Tom's firm is actually an investor in Matt's company. So Matt, maybe you could intro to that. You introduce yourself now.
What a great link, Simon. Yeah, my name's Matt Lumb. My previous role, I'm an accountant by trade. My previous role, I was the chief exec at a great British brand called Tangle Teaser, a hair care brand. We had a huge audience in China. Actually, China was our biggest export company biggest export country of the 70 plus countries that we exported to. China was our biggest customer. So I spent a lot of time myself out in Hong Kong and other areas of China. Since then, I've joined another startup. So that was very much a startup. In the 7 years I was there, we took revenues from $1 million to circa 30 million. I joined another startup a year ago this week, actually, a startup called War Paint for Men. We are a men's cosmetics brand, men's makeup brand, in fact, and we firmly believe we're the UK's leading men's makeup brand. The idea is to be very much a global brand, following a similar path to the ones that we've sort of taken in the past. We've just managed to close a round of funding, of which Tom was very much at the forefront. So I think he's a big believer in our brand and the space that we're in. And you know, we're only 18 months old, so we're still very early stage, but it's really exciting times. We're also based in London as well, obviously.
Thank you, Matt. Devin, would you kindly introduce yourself?
Thanks very much for having me, Simon, and I look forward to the panel. So my name is Devin Kohli. I am the co-founder of Outward VC. We're a leading UK FinTech fund focused on picking category winners. Our portfolio is quite diverse, from an over-the-top banking platform like Curve to a capital markets distributor and disruptor like Primary Bid, to Norris and Monese, which is a differentiated and leading challenger bank. Our LPs include the likes of Investec, NIBC, both banks, as well as leading family offices, quite a few from Asia as well, and Hong Kong specifically. Our focus is very much financial return. This isn't about innovation or disruption. It's very much focused on financial return for our investors. And as such, we try and pick winners who can really push through and win the race that they're in. So hopefully that's a good segue into Norris.
Yes, it is. And Devin's firm, Outward VC, have invested in Norris's firm. So Norris, that leads us to you. Please introduce yourself to the audience. Yeah, we're going to do the Zoom thing now. We're like, you need to unmic yourself. You know, you unmute yourself. The mic. You've got to love new technology. Can you unmute? Some of us might be able to lip read, but I could probably explain what you're saying to the audience. Devin is the best investor you've ever had. And without doubt, Monese is taking over the world with brilliant services. Well, maybe we'll wait for Norris to get his mic working. I can just perhaps start with the first opening question. And don't forget, anyone in the audience, if you have a question, you can ask in the Q&A, and I will keep an eye out for that to see if it's relevant during the conversation. And I will, of course, also ask it at the end if it's relevant to the panel's questions and points. So why don't we go straight in while we wait for Norris to come back on. He is the CEO and founder of Monese, just to highlight, one of the leading fintech firms here in London. And if you don't know Monese, you need to Google them right now and find out all about them. What Norris has done with that business is groundbreaking. One of the first businesses really to do this easy one-click internet banking requirement. And he has actually revolutionized the industry. Now there's lots of people following. And I have a lot of questions for Norris later, so hopefully he can get his mic working. So
okay, I got it. Sorry. Sorry, can I just, sorry. It actually was not, so I was on mute, but the organizers have sort of ticked the box and I couldn't actually talk. So sorry about that, but thanks very much for the very nice introduction, and sorry about that. But maybe a couple of other words.
Feel free to add.
Perfect, spot on, spot on.
Yeah,
but, yeah, just just wanted to say also that I'm Norris Koppel. I'm the founder and CEO of Monese, and Simon, you talked about this, but I think what we are really passionate about and what we're actually trying to do with Monese is to make banking incredibly accessible around the world. And the big dream basically is that wherever you are going to be, and wherever you travel, you just need a single banking app in your pocket, and you can get all your finances sorted wherever you happen to be. So the dream is a big one, and today we are in 31 countries and providing banking facilities to any person living in the 31 European countries. And we are about 5 years old, and I know and perhaps in sort of when you look at big markets like China, for example, maybe a few million users is meaningless, but here in Europe, few million users are taking you a long way. So we have indeed signed up quite a few million of users already. And we operate also as sort of a light banking model, which means that unlike big banks who need to be incredibly well capitalized and sometimes raise billions, we don't need to raise billions in order to exist. So we have been incredibly successful at raising much less money than big banks in order to succeed. Thank you, Simon.
Great, thank you, Norris. You did explain it so much better than me. I think for anyone out there listening, they'll know how hard it is to get a fintech business into 31 markets, and 2 million users is no small feat. I am your 2,000,001 customer. I recently signed up. I totally recommend it as a platform, folks, and sign up today. Now, why don't we get into some questions? The first question I wanted to ask you all, really, and maybe we can start with Sojin Lee on this question. What does the London startup scene look like coming out of lockdown now in the UK, in your view? I know there'll be a lot of people in the audience wondering what the UK market's going to look like, and what's your view on it?
I guess from my perspective, speaking specifically around retail and luxury, obviously, I look at it more like an opportunity. So, if you're looking at down markets, historically, everybody looks at, what is the next big thing, where the savings coming from. So I actually feel that if you are in a position as a company to deploy strategically where you're going to go next, it's actually taking advantage of the fact that we're in a down market now. So those opportunities are there to exploit, however they're relevant to your business. I also think that the recovery process for the luxury sector is rebounding faster. So I'm usually on a call daily with a multitude of large scale brands across the world globally. And when I listen to their figures and the fact that most of them have reached flat same figures from last year and the resurgence of what retail looks like, and that's across the globe, I find that that's quite reassuring. I think the biggest, I guess, unknown entity is just is there such a thing as a second wave? Is there such a thing as, a change in appetite in terms of where their consumers are going to be spending their monies? I think this summer is pretty important for most people because they're looking at understanding where consumers are going to be spending their summer, right? Like, are they actually going to be traveling? Is their appetite to get on an airplane? What does that future look like? I think on the downside, obviously, especially in retail, all you have to do is open up a paper and you'll also see that lots of companies are now making their staff redundant. So in that respect, I think that there's an abundance of talent out there also that can, that you can tap into as a young startup in order to, find hungry people who are looking for opportunities to take your company to the next level. And I also think that this appetite for skin in the game will grow. This notion of a safe weekly check or a monthly check, that psychology is changing. So if you are a startup and you have, as all good startups usually do, some sort of an option pool, that should absolutely be reviewed right now while you have the opportunity to bring on some pretty robust talent, considering people are looking for new opportunities in employment. But I remain optimistic, right? I remain optimistic in that sense. I think that's me by nature, because I think most entrepreneurs were made that way. We just keep going. So I do remain opportunistic, but and optimistic. But I also know that that recovery process will take a little bit of time. So if we can remain flat, and if you're in a good position to be able to, sit on cash, deploy it correctly during this period, then, you know, I think there'll be some really interesting big winners coming out of this in the next 18 months.
Thank you, Sojin. I recently interviewed Sojin and her story of being one of the founding team members at Net-a-Porter and what she's now doing with Toshi. So you can go to the Good Luck Club podcast and listen to her whole story. It's fascinating. But one of the things she said, I think the audience might find interesting, is that in a downturn is actually the best time to start a business. And there's a lot of opportunity in a downturn. And I guess you know, we're all facing the consequences of COVID right now, but there is opportunity. And Tom kindly introduced me to Sojin. So Tom, over to you. Maybe you could tell us your views on the future.
Yeah, I mean, again, I can only speak to the UK consumer space and particular premium consumer space. But I think at the moment, I think it's rich with opportunity, both for startups and investors. You've had years of change being squeezed into a matter of months. And I think COVID has just accelerated a load of themes that were already gathering pace. I'd be interested to hear what the FinTech guys say, but the current environment kind of reminds me of 2008, 2009, when the banks were kind of on their knees and there was that loss of consumer trust in the big incumbent banks, and they had big legacy issues as well. And now it's kind of flipped to the retailers where you know, they can't talk to the consumer in the way that the consumers want to be addressed, with authenticity, with purpose and kind of deep values, whilst at the same time they've got these physical asset bases that are weighing them down. So I think it's a great time to be a purpose-driven, you know, tech-enabled, small and nimble brand. I think kind of other observations, some of which Sojin has covered, is that I think in the luxury space, the startup scene is still really in its infancy. There hasn't been there's been this proliferation of crowdfunding platforms at the lower end. And then you do have a lot of private equity businesses that pick companies up at 5 million in revenue, but there is this gap in between still. And you're seeing less than 5% of VC funding going into consumer businesses, despite the fact that you've had in the UK successes like Net-a-Porter and Farfetch and the Hut Group and Just Eat. These are billion pound outcomes. And I think to add to that, we've got a lot of great creative talent here, a lot of tech talent. To Sojin's point, in terms of the short-term opportunity that consumer companies have, they're benefiting from lower marketing costs, less expensive talent, and lower rental costs as well. And then I think just selfishly from an investor's perspective, you're seeing valuations at a pretty big discount to US peers as well in the UK premium consumer space. And despite these businesses, even if they're only 2 years old, having 50% plus of their revenues overseas. So I think in summary, the startup scene is pretty immature still compared to the technology space and compared to the US. And I think it's a great time to be a startup because it's less competitive, and those reasons I mentioned, and in particular, it's a good time to be an investor.
Thanks, Tom. Matt, perhaps you could share your view, considering you're in you're building out a new category, really, makeup for men. So maybe you could talk a bit about that and how you see the UK market for that sort of product.
As you say, it's a very, very new space. My belief is it's going to go the same way that men's grooming went. 10 years ago, or a little more, maybe men's grooming was nowhere near the size it is now. We built the business predominantly on a direct-to-consumer model. We're branching into premium retail, but that's more of a brand positioning strategy as opposed to pure sales. Obviously, that's taken a back seat, so that hit us relatively hard. We had a ton of launches that were due to happen in March, April and May that have now been put back to July and August. Mostly UK retail, but 2 overseas launches as well, including one into Japan. So that's been put back a little bit. So, you know, we're focusing heavily on the D2C side of things. I think Sojin mentioned a point earlier around people making redundancies and trying to sort of look at that as from an opportunistic point of view. There's going to be a lot of quality talent out there that are potentially going to be available through no fault of their own. And, you know, that again, in terms of being based in London, in terms of like the pros and cons of being based in London, I'm sure most people on the panel will sort of point to the obvious one being that the talent pool here is huge. I think it's one of the most concentrated talent pools in the world. And I think that, so, you know, there's going to be many cons of the impact on COVID, especially people who have been sourcing product and component parts and stuff from China in particularly, will have been hit relatively hard. But I think, you know, again, Sojin touched on the fact that a lot of startups, it's not necessarily a bad time to launch during a downturn. Tangle Teezer launched at the end of 2000, early 2008, when obviously we took a huge downturn. And we, by hook or by crook, we managed to double revenues year on year for 7 years. So I think it's just being able to adapt and flex. I hate the word pivot that everyone keeps using at the minute, but I do think, you know, trying to look at the upsides is important, and that's, you know, that's part of our plan. We've just looked at this. We've tried to treat this as a blip in terms of the additional revenues channels that we're looking at in terms of overseas distribution and that, and we're, you know, we're very much looking forward to just getting back to it.
Thank you, Matt. Devin, how do you see the UK market now? What have you noticed?
I think overall, I think one remains quite positive. I think it's not, perhaps not very trendy to praise the UK government at the moment because of their general sort of acceptance of how they've dealt with COVID. But I think when it comes to the fintech space and when it comes to startups and the furlough scheme, I think there is some praise due. They moved quickly. I think the Future Fund was a much welcome addition to a lot of startups, particularly in the space. I think overall, however, consumer fintech has been significantly impacted by a reduction in expenditure, which has flowed through payments, which has flowed through all sorts of areas associated with fintech. So on the B2C side, there has been an impact from the likes of just sheer volume and flow of, whether it's on the FX side, you look at businesses like Revolut, you know, really being impacted quite significantly. You look at all sorts of flow businesses which have been also impacted. That said, you know, the government's response has been positive. There is new funding in the market. I'd also say another thing I've noticed is that funds have raised considerable amounts over the previous 2 to 3 years. So as a consequence, a lot of venture capital funds still have quite a lot of dry powder. For example, we are only 20% deployed in our fund, which presents significant opportunity. The wider economy, I feel, is moving, and particularly on the fintech consumer side, is moving from experience to transformation in terms of the sort of subset of the economy where it's going, a move towards transformation. So looking at businesses which play into that, I think, you know, there'll be an increased focus on how open banking can transform fintech and fintech spheres. I think if you look at businesses which have had what would one deem a good crisis, so businesses like Primary Bid, which have disrupted capital markets because of you know, they've managed to achieve in 2 months what they otherwise would in 2 years. So I think overall there's winners and losers in any situation, but I think there's just been an accentuation towards certain areas. I think you know, B2B focus on disruption and digitalization for large enterprise clients is going to be a winner. I think differentiated business models like Monese will be winners, which have got a clear core focus and a drive towards profitability. But I think that the other impact of the crisis has been valuation. There used to be a sort of, particularly for growth companies, an ability to have quite lofty valuations in the fintech space. I don't think that's justified anymore. I think there's a big focus on profits, on differentiation, on a clear, sustainable business model. And that will be the outcome over the next couple of months as you see a move towards a flight, I'd say, towards winners, towards security, towards clear business models. And sadly, that will mean in a saturated fintech space, I'd say even say a saturated consumer fintech space, there will be losers.
Thank you, Devin. I think it's good. I want the audience to pick up on something important in this, that you're hearing it direct from an investor, that there is still money out there for your company. So if you're a fintech startup in Hong Kong and you're looking for funding, it's there. Maybe you have to work harder, maybe you have to reassess valuation, maybe there's some adjustments to be made, but there's money still to be had. To Devin's point, it's been raised. So thank you for sharing that insight from an investor's perspective, Devin. Really useful, I think, for the audience. Norris, would you mind sharing your view on the future and how it's affecting your business now?
Yeah, I've actually done quite a lot of thinking on the topic of sort of obviously from fintech and let's say banking world. I've seen that there are companies who are relying quite a lot on people traveling, for example. We have seen that revenue obviously disappear. Anything cash related, cash in and cash out has also it's pretty much gone. But I do feel that difficult times really are great equalizers as well. And companies with strong models and sustainable models actually have a real shot here. And I do believe that Monese has that shot because, as Devin mentioned early on as well, we feel that we are solving a true, genuine problem for our customers who are moving to another country. They struggle with bank account opening. We are there for them. And because of that, being there for our customers, we have over the years secured our position as a sort of a salary account, as a primary account for our customers, and we support them in many languages, which basically means that during this crisis, yes, we saw some drop in revenue drop coming from the loss of sort of a travel or cash, but other revenue streams actually have remained very stable, and actually in some areas the spend has actually increased when we talk about online spend, and obviously, you know, anything to do with Amazon or anything like that has massively increased. So I think I'm seeing a real opportunity here, and which leads me to the next point, which is the availability of talent that was mentioned earlier. I mean, lots of companies have made lots of people redundant, and there is lots of talent right now that is coming through my mailbox on a daily basis. So it looks like there is a lots of availability, and we can basically pick and choose great people. And that wasn't really perhaps as easy as it is now. It wasn't as easy 6 months ago, for example, especially in London, where there is a massive competition happening for great talent. Next point I would like to make also from sort of a startup perspective is access to capital. It's very clear that especially when you look at early stage funding, you will see that lots of venture capital firms have become much more cautious, and perhaps there is less early stage happening right now. At the same time, later stage companies, I'm feeling right now that it's a little bit easier. It's not plain sailing, but it's slightly easier. And also I'm looking at, you know, from investor perspective, I mean, there's lots of good deals out there right now, I believe, because of, you know, the sort of evaluations have taken a hit. I mean, those people who are kind of more bolder and who are not following the herd, but who are smart investors who make their own decisions, then there is tons of good deals out there right now that can be used to, you know, take advantage of this sort of a turbulent time right now. But on a sort of a brighter note, I would say that I enjoy working from home, and I think many people who are currently working from home in our team, based on our recent survey, they actually feel that they have found at least 1 hour extra per day. And they, if they can, they would actually prefer to have a much more flexible working from home situation after COVID-19.
Thank you, Norris. Yeah, as someone working from home right now as well, I can concur until the doorbell rings and my dogs bark and everyone in the audience says, "Please, can you stop your dogs barking on stage?" But yes, indeed. I think I just got a question from one of the audience members, which I think just to divert to that for a second. Reed Hanway, thank you so much for asking. He's basically asking, you know, what can Hong Kong do to I guess lift its startup scene? As someone who's been in the startup scene in Hong Kong, I think it's got a lot to offer, and I think there's always this comparison between London, Hong Kong, Silicon Valley, New York. You know, who's doing it right? And London does have a really good image, but nowhere's perfect, right? So I think Hong Kong has its strength and weakness, and London has strengths and weaknesses. I think but what Norris just mentioned a moment ago about talent, frankly, these days, everything's, you know, global. There's no Hong Kong market and London market. There's a global market. There's a global market for funding. There's a global market for talent. and there's a global market for your client base. So I think sometimes it's just, you know, my view is thinking about it internationally, but I don't know whether any of the other panel, I know, Matt, you mentioned you had dealings with Hong Kong before, or Norris, if you have any views on the Hong Kong startup scene versus London, not putting you on the spot because this is an audience question that you didn't know about, but any views?
Yeah, well, I don't know the Hong Kong startup scene that well. We used some distributors based out of Shanghai, but I'd travel in and out of mainland China mostly via Hong Kong and meet with some of our supply chain there around component parts. So I couldn't really comment. I mean, I've always found Hong Kong to be an incredibly vibrant city, but I don't know the startup scene there well enough. I know it's very cosmopolitan. I know there was at least traditionally a lot of British based companies out there or offices out there, but I don't know enough about the Hong Kong startup scene to be able to make a direct comparison, I don't think.
Fair enough, Matt. Devin, I know we've talked before about the investment scene in Hong Kong versus London. Do you have any views on that?
I think what made London stand out is the FinTech. I can only really talk specifically around FinTech, but what made London really stand out was very strong government backing post 2010, and the sort of fusion of very good talent in a very small area, condensed with both, financial institutions, professional services, tech talent in the east of London, sort of all merged together very quickly. And what really also accelerated it was a very forward-looking regulator. So the FCA created something called the Sandbox, which allowed companies to experiment in the sort of unregulated area, which allowed them to sort of push out and quickly out beyond the UK. And I think if Hong Kong should try, and I know they are speaking and working with the UK regulator to try and do something similar, I think that's something which would be sort of using foresight, using the ability to experiment much more quickly. I think that would be something which would take Hong Kong well. I think we have seen a lot of Hong Kong investors come into the UK market in venture with mixed success, I think, overall. But I think one thing is what we're looking really for is a Hong Kong emerged business to project itself quite considerably into the UK and Europe. And I think if we get that situation, I think more will follow. You need sort of a train setter, a trailblazer, if you like, to come through. And I think that will really help build the momentum from east to west rather than from west to east.
Norris, maybe just jump to you for a second. I mean, your product is market leader. You've done so much with the banking sector. Why not open up in Hong Kong? Is it come to your mind as a financial center? Hong Kong should be top of mind, I guess. Is it a complicated one?
Yeah, from our perspective, I mean, we have always seen ourselves as a global player, and there'll be that time where we definitely would look into opening the service in Hong Kong. But right now, what we have secured is the ability to operate across Europe. We have, as a regulated business, it's a little bit more difficult for us to open our doors across the world. So we need to define big opportunities, get licensing and everything else sorted, and then we can launch. And right now, Europe really has been our focus, but we have been looking at other key markets across the world, and Hong Kong definitely has caught our attention as a gateway to East as well. But right now, I would say that not in 2020 plans.
So just switching gears, I mean, I do see a huge connection between FinTech Hong Kong and FinTech London. There's a natural link there. But there's also a link that not everyone realizes with the fashion industry. Of course, with brands like Li & Fong based in Hong Kong that are kind of helping people manufacture in China and ship all over the world. There's real connections. Hong Kong is a gateway to China. And a lot of fashion brands leverage the brain power in Hong Kong to build the networks out. But Sojin, I mean, just switching back to fashion for a minute, I'm interested in what you see as innovation in the fast-moving world of fashion. What do you see? And for people in Hong Kong that are involved in the fashion industry, what do you see this side of the water?
I mean, I think the reality is that innovation within the fashion industry is probably more specific to the product itself, the creativity around it, the uses of different fabrics, research into, elements of how you might manufacture or produce. Where I would say that innovation is slightly slower is, that we move a little bit slower, right? So there's a lot of seasons, so it's really dictated by manufacturing and, open to buys by retailers. And now that's all shifting again because, people are moving to more seasonless, let's say, collections because of COVID, et cetera. So everyone's doing kind of a re-strategizing. And I think actually, like any other industry, it's these moments that probably force us to innovate. And I don't think innovation is about creating something wholly new or being so disruptive that nobody recognizes it. I think when you are in a situation as we are in now, people are searching for ways to connect things rather than to find something that is so unrecognizable that it makes them have to rethink anything. So people look for things of comfort. People look for things of connectivity. So the most interesting innovation pieces, and this goes for why we did what we did, and like Tom said, certainly COVID has accelerated Toshi's relevance in the market, and we had a record-breaking June because home service all of a sudden is something that is absolutely needed. And the interesting thing about this is that innovation for us is about just adding the dots together, so to speak. I think fashion probably could benefit from looking at other industries and understanding what kind of tools and features and functions they're using to connect with their consumers and integrating those. I think the joy of innovation today is that there's so many fantastic products out there and so many fantastic off-the-shelf solutions that the concept of what we did at Net-a-Porter in day one, which was we really had to build our own proprietary platform, is no longer the issue. You can focus on other things because you have technology and tools to your liking. But I think if innovation is there, it's probably not reinventing the wheel, but it's probably taking aspects and behaviors and needs and thought process and emotions of consumers and actually allowing them to, basically just give them tools that help them make those everyday behaviors easier, more convenient, et cetera. And that's certainly what I'm seeing still, anywhere else. A lot of video virtual selling is happening within retail that's considered innovative. There's some great companies out there who are doing and leading that space. People like Hero, which I'm a huge fan of Adam Levine, who I'm friendly with. And, I think those are the aspects where maybe before they would never have considered to do it. And now everyone's saying we have to do it. There's just so many I could name. But before that, I think we just went down more kind of what you would consider obvious streams like personalization, in the fashion industry. I don't believe that things like that are necessarily the innovative part. I think it's actually connecting the tools of potentially other industries where you can come together to create new experiences or new connectivities. But I would say the joy right now is certainly just make life simpler, make life more convenient for your consumers if they recognize what you're doing and you're making the function easier. So like for Toshi, it's really about us taking already the behavior of the consumer, but then, building in technology that allows us to deliver a human, a store assistant, if you will, but bringing that store assistant directly to the consumer's location. So it's something like democratizing, car services like Uber did, or food like a Deliveroo or a Postmates or a Grubhub. That's the space that we're occupying because I don't think we're reinventing the wheel. All we're doing is we're delivering a pre-existing need, a pre-existing behavior, but delivering it in a different format because it's now supported by technology which is available to us readily and easily.
Thank you, Sojin. I think what you're doing is fascinating. And again, anyone interested in what Sojin's doing, you can Google Toshi, you'll see. But I think what's interesting is adding that human element into the technology piece is almost going the other way. It's like vinyl's making a comeback, that kind of idea, right? Tom, I just wanted to lean on your experience, and actually for you to share as well. I mean, Hong Kong was always known as this place that people go to buy a lot of luxury goods. It's interesting you've been calling it premium consumer, which seems to be an update to luxury goods. So maybe you can explain to the audience what the difference is. And at the same time, I know a lot of people in Hong Kong have an understanding of luxury. And so they'd like to understand what premium consumer means in your mind. But I know they'd also, they've got ideas in luxury because they've been surrounded by it. So if they were looking to get investment from you, what do you look for in the companies that you're investing in?
I think on the premium consumer point, it's just a change in fashions within fashion, I guess. It's a kind of, it feels like a more inclusive phrase, possibly than luxury. And that's certainly what I think luxury is trying to be, is more inclusive. And I think it slightly touches on one of the things that we look for is that we haven't really talked about yet, is this sort of changing consumer mindset that's happening. And it's previously been termed as kind of the millennial mindset. But it's increasingly becoming mainstream, and it's an attitude that you're seeing across every demographic, and it's partly been kind of catalyzed by movements such as, you know, Extinction Rebellion, gender, racial, sexuality, equality, hashtag Me Too, and basically what it means is that brands that stand for something, that behave in a certain way, will be much more successful, I think, than previous brands that are going to be much more heavily scrutinized, or the incumbents. And it's the kind of bottom line value proposition is fast becoming this kind of triple bottom line of kind of people, planet, and profit. We talk a lot about it, is this fundamental consumption shift from buying from to buying into, a kind of new value system that's defining consumer culture ultimately. That's kind of more conscious, more mindful, more sophisticated, more informed. And I'd sort of go as far as to say that there's a whole new form of kind of stakeholder capitalism that may well be built up by startups, because the big brands don't have the adaptability, and they're massively constrained by these legacy issues. So I think we really look for that. So we're looking for purpose-driven brands that really speak to the consumer in a certain way, that have the ability to build a community around the brand, not a segmentation of consumers.
Thank you, Tom. Thanks for sharing that. Maybe we've got a few minutes left, so just want to make sure the audience, if you have any questions, feel free. I'm now looking at the questions section, so feel free in the last few minutes to ask any questions. But I guess I wanted to open up to the group and say, I guess there was a question earlier about the Hong Kong versus London startup ecosystem, but I'd be interested in what you guys think of the London startup ecosystem, and kind of one thing you'd like to change, and maybe two things you'd like to keep. And maybe Sojin, you could quickly answer your view on that.
Yeah, there's a pre-COVID answer, and then there's the post-COVID answer. So when we started our journey 2.5 years ago, I was absolutely grateful as a seed round, or pre-seed, I would say, for kind of tax structures like EIS and SCIS. They're absolutely fundamental to small businesses like us being able to get off the ground. So it gives the value back to the investor and allows us to move forward. So that kind of incentivization has been really, really powerful. I also think that the benefit of London has been that even in the sort of 18 years that I've been living here, the cosmopolitan international acceleration of investors who have come to London has really offered us a very mixed, interesting, strategic base of investors. So from my seed round, I have investors from Hong Kong, from the US of A, from Belgium, from France, from the UK. So real mix of people looking for strategic opportunities. What I like about the SCIS EIS is that it allows some of these individuals who might be running huge funds and have other, far larger businesses on the side where we're too small. It allows them to put some of their own personal capital in, monitor the situation, and then look to see how they can bridge that gap onward to obviously their main businesses in the future. I think to your point, what is also really interesting about London is the connectivity, globally to the rest of the world. I certainly experienced that when we were starting Net-a-Porter, and also with Toshi and the investors that we have now. All conversations are never just about London. All conversations about what's the rollout plan, what's the pipeline, how do you get to the next region, how do you connect, how do you take this? Because, for us, certainly when we work with, some of our large companies, they are global players. So, you know, as we grow across the world, the point is that once you sign on one global player, you're able to then offer them that service as you also offer your services in other markets. So there's that opportunity there. But I think to, you know, everybody's point that everybody's made so far, I don't really have a negative in that respect. I think that maybe, you know, as founder investors, there could be a bit more perks because obviously I'm exempt from the EIS and SEIS, and I know that, you know, I get other perks when we sell, but that could be a benefit for people like us who also do invest in our own businesses. But ultimately, I would say the London scene for me has been great. I'm just about to close my second round to, again, you know, Devin, Norris, everyone's point, you know, people are looking for value. People were looking for opportunities. When we hit COVID, I looked at my valuation and my raise and I thought, I'm not competing now against every other startup. I'm also competing against Airbnb. I'm competing against any other value public market opportunity. So if they're gonna put the 200,000 in, why put it with me and not something else that could come back, you know, and is a larger company? And, you know, lucky enough, we had a strong base of investors, existing and new, who understood the opportunity of why home service is critical. And then again, bolstered by EIS, they felt very confident to say we will take a bet on Toshi growing during this period. So it's mainly positive from my perspective of London investment.
Thank you, Sojin. It seems like we're running out of time. It's like the Oscars, the music is playing. So if you want to hear more from the panelists, then you're going to have to join my podcast show, where I will interview everyone here at some point and hear their full story and what their views are on London and how maybe they can help you not only in London, get into Europe, learn from their experience. So please reach out, guys. There's some links within the Start Me Up website to us all. So feel free to reach out to the panelists and myself anytime. Thank you for joining us for this panel. Thank you to my panel for your time and for sharing your insights today.